let's go ahead and get started here. It is Monday. I definitely have a case of the Mondays. I'm a little slow this morning. There has just not been enough caffeine to bring me back. All right, so it's Monday, April 22nd, 2024. Spoos, they are a running. We have the first attempt at a real bounce in quite some time. There has been sell-side activity. There has been more sell-side activity, and today we are on the bid. Will it last? You know, you do have to question the will this last today because the bonds, well, they're down. So the bonds are doing about 140,000 contracts in the pre-market, which is relatively heavy. Sorry, I'm looking everywhere for my pen over here. Can you see the lost look on my face over here? Anyway, so bonds have actually got some decent size on them. And the other thing that's going on this morning is I know that the marketplace is rallying, and I would expect the volatility should come off a little bit more. It's really not. So it is a tentative rally at this point at best. Take it with a grain of salt, and that's the way to trade in the midst of volatility. But we definitely have a bid back under us. But hold that thought. There is huge issues going on. Of course, from last week, expressly inside of NVDA. NVIDIA has a big bid, $20 bid. Oh, this is going to be interesting. If you guys didn't see Super Micro has got a big bid under it, but man, it got annihilated on Friday. So I'll be watching some of that AI trade a bit today. And again, this marketplace, it has a bid under it. But I'm just going to say this and be as clear as possible on this particular front. People are saying there's no sound. All right, bear with me here. I'm showing sound, just making sure we're good. This marketplace, you know, we're good and we're good. Okay to go. I'm okay to go. Just wanted to make sure we are good on sound. Huh. So sound is good. Anyway, with that being said, you got 35 seconds to go to the cash open, and I got to be really, really clear about this. You're going to see some scary moments today. We might not sell off, but you're going to see some very scary pullbacks throughout the course of today's trading session. If anybody believes that this is going to be a nice cakewalk to the upside, okay, I don't know where you're living, but it's not in this marketplace. You're going to get some wild trade inside of today. So let's come to the cash open. Apparently, the cash open is happening before I am, but let's come to the cash open here. Positive advanced decline line. So advanced decline line is almost correlated to the upside, 79 advancers. When it comes to ticks, you should have nice, raging, strong ticks. But I'm going to state again, this marketplace, this is not what you think it is. See, it's positive 927. I'm actually a little bit surprised that it's that light. Another interesting facet on the screen right now is the sector that was the strongest, the sectors that matter that was the strongest, is none other than the financials. The financials, though, this was on Friday, were the strongest kind of suitor out here. The bid this morning is rather meager. And again, I can't stress to you guys enough. I mean, Tesla is news related. We'll come to that. I can't stress to you enough the how real the threat is of some wicked pullbacks throughout the course of today. Every time you see a bid under a marketplace that has been under perpetual sell side activity, believe me when I tell you, people are gasping to try to get out of positions. And the first bid back, that is the first time we buy back, people sell into it. And I'll draw it up on the screen in a few minutes. And I talk about that, but I want to make sure that everybody is just kind of up to speed on, you know, why am I looking? And I'm literally telling you, there's going to be wicked pullbacks. I can't tell you if it's going to be sell side activity that's just going to pummel this tape. You know, I can't tell you that, but I can tell you that the path is not going to be a clean one, even if we do rally today, not by a long shot. Are we going to see that path be a clean one? There's one positive aspect, at least at this moment, is I see that the S&Ps are backing off. I got it, but volatility hasn't caught a bid, not yet anyway. This is well worth watching because if volatility catches a bid, they're coming for this marketplace once again. And that's going to be important. I'm watching the volatility at this point in time, which actually subsided, but I'm literally watching volatility more than I'm watching the S&Ps because look at this. See, we're bouncing back already. It's almost like volatility knows. Of course they know. Okay, because volatility is, that's the trading firms with their hand right on the trigger. So be aware of just that. So here is again, vol future starting to back off. This lends itself to considerably more upside capacity throughout the course of the day. Meanwhile, in early trade, you've already seen Microsoft cough up its cookies over here. Microsoft is basically flat. Apple is flat. You have Amazon with a decent bid under it. Speaking of Amazon, let's go take a quick glance. Some of the order flow in here. We have call buyers in Amazon. Call buyers are in Amazon trying to lift that little monkey back up. Meta, big bid here. There is no size trading through Meta whatsoever. That's a little bit alarming. This is a big move. On a percentage basis, you're, 1.5%. There's no options activity behind it. Meanwhile, NVIDIA, which is having a 3% move, okay, there's call buying, but it's pretty nominal. Again, the call buying is nominal. There's lots of puts being sold. This bid, flimsy right now at best. I mean, I'm not stating that we're not going to get rocking to the upside here as this day kind of progresses. But right now, okay, it's a fairly sketchy little rally. Look how fast Microsoft just took off. I mean, that thing was just down 21 cents seconds ago. Okay, talk about like some wild, reversals and wild trade in here. And it's not call buying. It's just algo's hitting a stock. It's really weird. That's something we just, we haven't seen this. There's like no liquidity then behind it. Interesting. Okay, very interesting. Yeah, Roy was asking atomic hedge after a bid up. Look, the atomic hedge, you're not supposed to really try to time that thing. You just want to kind of cover your portfolio. But I have to be honest, Roy, that's exactly why markets sell off, because people are waiting for the bid back. That's why markets are going to sell off. That precise logic, what Roy just said, is why markets can't get out of what is a little bit of a downward spiral. Coffee. I got coffee. That's going to happen. Oh, look at this. And here we go. As I said, the path is not going to be a clean one today by any stretch of the imagination. The ticks, by the way, have flipped over this morning. We are actually riding on a negative tick. The advanced decline line has gotten slaughtered, and it is sell side activity. But what I really want to bring you into, where the selling is coming from. So the financials are taking a little bit of a hit. Look, I've been waiting. I'm waiting for these things to actually get a bid under them because I was going to fade them, but I just can't get a clean shot at them. So what I mean by that is if you look at the financials, they got hit, they bid up, and they roll back over. I need a clean day to try to get my like in-out spread or something on them. And this is, I mean, this could definitely be the clean day. When I say clean day, I just need a day that, we kind of continue to the upside a little bit more. I'm comfortable with how far we've moved, but I just don't know if we're going to get it. I mean, this marketplace just wants to suck the life out of every last trader, and I like it. This is some of the price activity that actually does it for me. The market, again, don't be scared in seeing the S&Ps up 20, okay, having a precipitous drop. As I said to you, the idea of a rally is not over. The idea of a rally is not over, but every single time, I think it's worth explaining this right now, okay? Let's go to the spiders to use for a little explanation. Just let this marketplace open, let it do its thing. Even if we're rallying right now, the vol is coming down. If the volatility comes down, the rally is not going to hurt unless you're just outright like short shares. Rally's not going to hurt though if you're short options, because the option implied volatility should crush as we go up. So if you're short calls and we rally back towards those calls, it shouldn't be necessarily a bad thing. The only question is, are we going to rally? Look, we are in right now. Okay, and let me zoom out for a second to make this much more appropriate. We're in the first bout right here of some sell side activity that we've literally seen. And again, don't worry about the S&Ps right now. Okay, just don't worry about them. We're in the first bout of sell side activity that we've seen literally from November, December, okay, January, February, March. You're 5 months into what has been a relentless bid to the upside. Now, just because we had a significant move higher, okay, it does not mean that you just, you have to sell off into the abyss. That's not the reason that I'm bringing this up. What I'm trying to bring up is in sheer respect to the selling that we've seen, and this selling kind of kicked in the S&Ps. You're, one, maybe two, let's call it 3 weeks into it. Let's call it 3 weeks, because this was definitely a down week, and that was a down week. And yes, last week we cracked the expected move. So let's say we're 3 weeks into sell side activity. Who cares, right? The only thing that's really tough right now is that in the last 2 weeks, there hasn't even been so much as a gasp to the upside. There has not been a bid, okay, for more than a few hours. And this is a really challenging point in time. This was just some chops, some volatility, okay? This was some more chops and more volatility. The first real strike that we had against the marketplace, okay, was categorically for me right here, which would have been on, again, April 12th. I mean, I know there was some sell side activity, right? And whatever. This was actually a really big down day, but it reversed a little bit. This was just chop and volatility. Selling started to kick in here on April 12th. We haven't even had more than a few hours, even an overnight trade, of a bid under the marketplace. Okay, so we have a little bit of an issue. And what is at issue at this point is every time that we start to rally now, okay, no one has been provided the opportunity to exit positions. Okay, now there is a ton of retail that wants to exit right now because they're like, this is it, baby. We rode you for 5 months. Now I got to get the hell out. And I understand that. I have all the respect in the world for that. Okay. But you're waiting for a bid back, just like Roy said. He was waiting to put a hedge on. Totally cool with that. But every time we come back up, there's going to be sellers right now because everyone is waiting for the boom. They're waiting for the gasp back to the upside. Okay. And in doing so, and it makes the idea of a rally incredibly, incredibly difficult. So the only rally, okay, that can really grip hold would be just an incredibly fierce one. But again, its path is not going to be an easy one to the upside. It's just, we can rally, yada, yada, yada. We almost need a catalyst, maybe some of the earnings coming later this week and some of the big tech stocks. You almost need a catalyst to get out of the this cyclical down move. Because again, I mean, you can see quite literally, every gasp of air to the upside is being met with sell side. And, that'll abate when people that are covering shorts, okay? For instance, I have shorts on right now. Short meaning like I'm short the S&Ps. So if we continue, down, eventually I'll cover something. Cover means buy, and we'll bid back. So the market at this point, I know people don't like the idea of shorting. I mean, look, I read crap in the marketplace. Short sellers are this and short sellers they're that, and there's naked short selling. I mean, Twitter was ablaze this weekend talking about naked short selling. People don't know what the hell they're talking about. In a market like right now, if you don't have shorts covered, you're done. This market would crash and burn. Shorts, okay, support the bid under the marketplace. I'm going to say that again. Shorts support markets, okay? There is short selling where they pummel stocks. That's a little bit different, where short sellers come in and they're like, let's pummel this stock, okay? But in futures contracts, there is no limitation to a long versus a short. And here we go. There's no limitations. They could just whack this thing into an oblivion. But when people cover the shorts, they're buying. So at this point, okay, at this point, you don't do anything right now. You don't do anything. Look, you don't short into this hole on an intraday basis. You don't short into this hole on a daily basis. That this is shorting into the hole. Sheer stupidity, don't do it. And I'm trying to be very harsh with saying that because you don't put positions on when you're getting smashed, right? If we bid back up, okay, then maybe you can get a bearish position on. You don't put bearish positions on when you're this deep in the hole. You got to wait for the bid back. You got to hope that your shorts are going to cover, will bounce. Okay. That is a position you have to be in. Now, what could you do right now? Well, if we continue to sell off today, you can definitely sell some premium into it. I think we're finally at the point where we might be able to sell some premium. But again, the day is young. These are sessions, okay, that are not difficult, but you do have to wait for the marketplace to kind of come to you, right? It's just a little bit of a waiting game. Be patient. Volatility, okay, will wreak havoc upon you if you're not incredibly patient. You're never in volatility. Get this out of your head right now. You're never going to have a good entry point in the midst of volatility. You're just going to enter into it. You know, once in a while you'll catch a high or catch a low, but you should just get that crap out of your head right now. Like I was talking about an entry point here on the financials. I'm very clear. This is a bounce and fade trade. We faded, we bounce, and we'll probably fade again. Do I know that? Absolutely not. Okay. But somewhere in here is a good a time to enter, like, oh, we could rally though down all the way to 41.25. Okay. For the 50% retracement. Okay. You're 618. You don't know that. You don't know that. And in the midst of volatility, okay, any bounce is something to fade. Who cares if I fade it right here or fade it right here? It's not going to make a damn bit of difference if we come up and come right back down, you know, and retest through some of the lows. Wouldn't make a difference where I faded it. So today, okay, I'm sitting here kind of waiting for a little bit more of a bounce, and I'm cool with waiting for a bounce. If we get one, phenomenal. By the way, look at the ticks again. So the ticks have turned back positive. It's all going to be okay. But as I said to you, it's not going to be okay. It's not going to be an easy marketplace. The advanced decline line is not helping us at all. The ticks over here, okay, are a huge fallacy because the ticks make a difference if, for example, NVIDIA, okay, were to turn around and get smoked. NVIDIA is what is worth waiting for the bounce. I mean, it got hit by 10%. Okay. It's almost at a 50% retracement. God, I can't stop with that crap. Okay. It's almost, okay. It's almost nothing. Anyway, look at that. They're still selling more Netflix. How exciting. Anyway, with that being said, again, you're going to have to be very patient, okay, today. Also know, well, let's come to it here, early trade. Know where the daily expected move is and know where the weekly expected move is, because it's the only thing in volatility that you can kind of wrap your arms around. You know what we're supposed to do, okay? You know that what we can do. But today, which is April 22nd, you go back to, last weekend. This is, non-trading day showing data from April 19th, which is last Friday. And you should know that today's expected move, that's right, people, is 44 bucks. Did I not state that enough? It is 40, okay, $4 of expected move. Where are we right now? I got half. You got nothing. You ain't got squat. So you're in a $44 expected move. And of course, people go, no, my expected move says 28. Okay. That's because you're looking at the wrong expected move. You're wrong. Okay. Oh, come on. All right. We've all been told we're wrong before. Okay. I'm married. I get told all the time. The point being, though, this is not the right expected move. The expected move you want to go off of is the close from Friday. So it's about a $44 expected move. And again, looking at the move right now at 21 bucks, that's why I'm telling you, this is not squat. Doesn't mean a damn thing. Just let it go. Yeah, maybe. Okay. So where are we on the week right now? We are nowhere. Speaking of the week has about a $96 expected move. Just freaking round it. Okay. Just round. Tim, come on, Tim, you're killing me. Look, it says 44.01. Okay. This is the one I'm using, Tim. All right. Oh boy, they're splitting hairs. I saw people like splitting hairs over like a couple of pennies. You do realize this is a $5,000 product. It's a $5,000 product. You're talking about a couple of pennies in there. No, it's okay. Okay, it's okay. Anyway, by the way, somebody's asking, you can get the expected move on Tasty, but the one on Tasty, in my opinion, okay, the expected move on Tasty is right over here. Okay. In the index products, and again, I want to be clear about this. Pretty good rally underway right now. I mean, specific to the Nasdaq. Nasdaq's ripping. let me clarify. In the index products, I much prefer the expected move from thinkorswim. In the equity products, what's equity? Stock. Okay. In stocks, I much prefer the model used in Tasty. And I've said that before, but it's been a long time since I've said that. So if you are on Tasty, okay, first of all, you can draw crap on charts in Tasty. Okay. Tools. There's tools, man. There's tools. Anyway, you can draw crap on the charts in Tasty. What I suggest that you do is you take my expected move of 96.04. Okay, sorry, I'm trying to draw that with a mouse. You take my expected move of 96.04 and you put that expected move on Tasty. Is that easy enough? Okay. Yeah, I just want to be clear about that one too. Yeah. Yeah, it was Mark in the chat room today talking about his API. It was off. See, the thing with APIs, Mark, by the way, for those of you that have no idea what an API is, imagine that Mark plugged, okay, his computer into the data that comes from here, we'll say thinkorswim. So he plugs into the data from thinkorswim, okay, and an API is basically sucking data. Okay, so Mark is a gigantic sucking machine of data, specifically from thinkorswim, and you just like data. It's an entire science, but like when does this analyze tab? By the way, I'm in the analyze tab of thinkorswim, but I'm also going to show you something that's like drastically off in thinkorswim. So wait a minute. Okay, this is think back. I'm actually in think back right now, so it's old data, right? It's snapshot data. The only thing is you don't know exactly when this server takes the snapshot. It used to take a snapshot at about between 3:17 and 3:20 Central Time. Okay, I know that sounds kind of weird, but and then I think they moved it to like 3:30 Central Time. I actually don't know precisely when they take the snapshot at this point. Okay. And I'll be honest, like I'm not even calling anybody. I'm done. I'm done talking to them. I point things out that are wrong there all the time. And the answer I get is, what do you want me to do about it? That's, yeah, big business. Okay. If you guys are haven't heard this before, I really don't like big companies anymore. They don't give a damn. Nobody gives a damn anymore. You call them, forget it. You can't even get through. I'm talking about, thinkorswim. Talking about call Chuck. Okay, talk to Chuck. Chuck don't want to talk to you. Chuck doesn't even know how to talk to you. Chuck will not talk to you. And by chance, if you do talk to Chuck, Chuck don't know crap. Okay. So yeah, there you go. I got that. I'm okay to go. All right. Chuck, don't know crap. Yes, that's it's the phrase of the day. Meanwhile, people like recording this like, I'm gonna play that back for them. Believe me, it's nothing that I wouldn't pick up the phone and say, what the hell? You guys don't even know what the hell you're doing. Click. Okay. They have no phone system. It's terrible. It's absolutely terrible. Okay. I have to tell you, there's only one big company recently, one that I've had a decent experience with, and it's been Costco. I'm serious about that too. I uh, I have I had to get tires on my car. They were wonderful over there. Never going to anybody ever again. Okay. My car eats tires. It has a little bit of I have a tire issue. Okay. The only big company I've actually dealt with where like the people, like everybody there they're like genuinely, I think, liking working there. Okay. I can't imagine that, but it's strange. Okay. It is a strange thing. Um, anyway, onward and upward. Okay. Somebody's saying, Steve, you selected. Sorry, I'm reading back in the chat room over here. Okay, let's get more down to business. Talk a little bit about a few things specific to stock news. So I kind of went through the SPX expected move, and again, the SPX expected move, as I will reiterate, is about 96 bucks this week, just rounded. Just so it's $96. You're looking for a $96 move higher, $96 move lower, and you're like, oh, we've already moved almost a third of that, and that's true. But today, again, there's a $44 expected move. So that stuff is very critical. The next really critical thing that I see on your screen is that if you're bullish, okay, volatility is starting to back off. That, in no uncertain terms, that is the most bullish thing on your whole screen right now. Now, don't take this the wrong way, but volatility could just fly right back up. But as long as it's crushing, right, and stays down, markets are not going to reverse just yet. But as I said, if you're looking like, let's just, for example, let's say 10 minutes from now, the market starts to sell back off and it gets back down to 50-20. So let's say just 10 minutes from now, the market's at 50-20, and you're like, oh, but still my heart, I think we're going down. Okay. You need to, at that point, if the market starts to sell back off, okay, have a little conversation between you and volatility. If volatility stays flat or goes down, we're not selling off just yet. You're going to need vol to pump back in before anybody gets really nervous. So use volatility futures, not VIX. Okay, not VIX. I mean, VIX is, they'll confirm it, but use volatility futures, okay, to keep yourself sane today. And that's the VXK24, right? There's always one in the crowd who's like, I can't even get volatility futures. What do you want? Like E-Trade, man? What do you on E-Trade? Am I making fun of your platform? I'm on Robinhood. How'd you know? Okay. Friends that work there, even they make fun of it. All right. Continuing on from there, the energy sector. The energy sector, okay, has kind of flattened out a little bit. The reason I'm bringing it up is it has had big movement today, very big movement. It makes a difference looking at energy, not because it's going to move the whole market, but it's going to help this advanced decline line considerably. And the reason I'm bringing it up is the energy sector is on a tear once again to the upside. It doesn't necessarily constitute geopolitical risk. I think the assumption is at this point, the geopolitical risk has possibly died down. But, okay, energy is a bid back under us. Energy, though, as I said, it's going to help this advanced decline line and help this advanced decline line quite considerably throughout the course of today. The reason I'm bringing up energy, also going to look at oil, okay? Don't necessarily get caught off guard by the fact that oil could bid right back up. I've been saying this, okay, for days and days. Geopolitical risk, okay, hasn't been the reason, it's been the excuse for the sell side, okay? Geopolitical risk has not been causing this. geopolitical risk has just been a little bit, greasing the way down, if you will. It makes it very easy for people, okay, to want to whack positions when there's geopolitical risk out there. This week, though, what's your reason this week? Well, the catalyst this week, you pick it. The catalyst this week could obviously be GDP. GDP is late in the week, is on Thursday. But on Friday, PCI data comes out. So personal income, yada, yada, yada. This is what the Fed, PCE, apologize. Okay. It's personal income. So I'm always thinking PCE, personal consumption expenditures. Okay. Holy crap. What do they have? Like actuaries name this stuff? Anyway, the point of me bringing up some of the PCE and so forth is just so you know, like, okay, on Friday morning, that's a huge catalyst. That's not the only reason I'm bringing it up. I'm bringing up PCE, okay, simply because it's going to keep volatility bid throughout the course of the week. So volatility might back off early this week. Even if we rally, though, look out. That PCE is going to keep these numbers high. So throughout the course of the week, you're kind of thinking like volatility is going to come down, volatility is going to come down. Volatility is not going to come down that much. So you have two pieces of major economic data. Again, on the calendar, you've got GDP. GDP is important, obviously, but PCE is the big one. PCE, and then, of course, consumer sentiment. The University of Michigan, yay! They have that like every other week, okay? Anyway, I just wanted to bring that up. It should keep volatility bid. The other thing that's going to be critical this week is you're going to be going into earnings, right? So earnings are forthcoming. Earnings are going to be rough. You have Tesla's getting the living snot beat out of it over the last couple of days. It's finally got a bid back under it. Come on, Tesla, you can do it. All right. Tesla is going to have earnings on 4/23. That's like the first one up. That's tomorrow after the bell. All right, tomorrow after the bell is going to be Tesla earnings. Then you have the likes of Meta, Microsoft, Intel, Google. Those are the ones that are coming. Obviously, Amazon, if you're curious about Amazon, no, it's the week after. And Apple, okay, is also the week after, which is the second. So anyway, you have most of your big market caps are going to have earnings. Again, Google, Meta, Microsoft, Intel. I'm mentioning Intel because I'm going to show you something else interesting here. I see the S&P is backing off a little bit. Listen, I keep reiterating here, just let it kind of happen. Sorry, I'm trying to stand up. Let it happen over here. You know what? Bear with me here for 2 seconds. Please bear with me for 2 seconds. I just realized that somebody is talking to me and I need to answer them. All right, bear with me for 1 second. I may have to actually, I got an issue with a kid right now, so I may have to actually duck out here for 1 second. Bear with me here for a moment. All right, I'm going to bring somebody back on for just 1 second. I'll be back in here. I just got to take care of a child. All right, Jeff, you're live, Jeff. I'm actually going to have you share screen in here, and I'll be back in just a moment. I'm just going to make sure that Jeff is good to go. All right, I'm going to bring on Jeff Bierman. He is good to go here for just a moment.
Hang on
Okay,
one second.
Jeff?
Hey,
All right, go for it. You
down.
can share your
Slow
screen.
down. I got to turn the sound
You're
off.
live.
I'm live as in I'm good to go to kick off my hourly
No.
presentation.
No. You're just live right now. I'm going to be back in like 10 minutes. I got to run.
Okay. Down.
Jeff, you're live, Jeff. I'm actually going to have you share screen in here, and I'll be back in just a moment. I'm just going to make sure that Jeff is good to go. All right, I'm going to bring on Jeff Bierman. He is good to go here for just a moment.
Hang on a second. Hey,
all right, go for it.
Slow down. I got to turn the sound.
You're live.
I'm live as in I'm good to go to kick off my hourly
No. You're just live right now. I'm going to be back in like 10 minutes. I got to run.
I think Don's got to grab a call for about 10 minutes. So I guess I'm going to run with it from here for just a few moments. Market's up. Did Blake, you with me?
Yeah, I'm here. I saw you there, and I just wasn't sure if you're taking it there for a minute or.
I guess he handed it off to me, but I think he meant to hand it off to you. But I'm live, so I'm going to run with it.
All right, I'll let you go. I'll see you here in about an hour.
All right, you got it. All right, so here's the story here. Do I think the market's going to be up today? Yes. Does it matter? No. Let's be frank here. The market's been down 7 consecutive days. 7 consecutive days is highly unusual in this business. In other words, the probabilities of the market being down an 8th day, it's infinitesimal. So I'm prepared for the market to be up today. I'm looking at the market today and I'm not thinking it's up. I'm not surprised at all. I figured the market's oversold enough today where it's going to get a bid. So if you look at the advanced decline, it's 17 to 8. You got 2 stocks up for every 1 down. Now on Friday, that didn't mean squat, but the difference today is it does mean squat. Why? Because it's a risk on day. It's not a risk off day if you actually look at it. So you've got leadership in technology, you got some leadership in financials, you got some leadership in things like Airbnb and Booking.com. You have the peripherals, the consumer durables and whatnot, and the leisure stocks. They're back in play. So they beat them up for a week and they figured, we'll rotate back. So this is actually a risk on day. So when I look at the market, and this is one of the things that I like to do, and I advise all of you to do this. I know a lot of you are intraday traders, and I'm not going to tell you how to trade. I'm not going to tell you how to do setups. I'm just telling you, you got to look at things from an hourly perspective, 2 and 4 hour. On an hourly perspective, and I have rules. These are my rules, they're not your rules. My rules are simple. I just don't short on the way up. I don't care what you think. I know algorithms better than most people, and algos buy on the way up. And I am not going to short that. Now, we may top out and roll back down. That's fine. I come from the Kaufman school in the simple, we have simple rules. We do not short into a hole. I'm not shorting into a hole ever. It doesn't make it. We're down from, 5,300 to 5,000. Is it a lot? Not in the grand scheme of things, it's not. But 300 points is 4%. And I don't believe markets move down in a straight line. I don't believe they melt down. Not unless there's some like cataclysmic, blind spot COVID type event. No, markets are controlled and tempo controlled by algorithms that are buying and selling. No. So I figured we'd be up today. So am I playing for it? Yeah, that's why I got long on Friday and covered. I'm down to like 2 short positions now. So I'm not feeling the heat other people are. Goes up 300, I'll reload. So I just swing trade from high to low. I don't like the way this is setting up. You can put aside the money flow. I don't really care about that today. All I care about is that positioned upward? Yeah. Is that positioned upward? Yeah. Yeah, they're all positioned upward. That doesn't make me want to short. And I'll put this more in perspective. Here's the 2-hour. Now, the 2-hour itself hasn't even gained traction, but based upon my rule of cycling, everything cycles in the business. I'll go 90 days. Look, I'll prove it to you. That's cycled all the way from here to there. Now the likelihood is it's going to cycle all the way back up. That will cycle back up. That will cycle back up. Will it get us overbought? Eventually it will. Where is it going to go? I don't know. But if I were taking just a regular technician's guess, I'd say we're lucky if we hit 52.50. That'd be a push. But more likely, the market's going to try to get back to that 51.5. So I think we got 150 points potential upside in here. But what's going to happen once we get there? Yeah, well, the institutions and the retail people are going to wake up and go, no, sorry. They're going to reload and they're going to want to sell this thing. So I'm of the ilk that, you can step in and say, I want to buy this. I'm not going to tell you what to do. Go ahead and buy it. I'm not going to buy this. Longer term, I think we're going down, but I think we got a shot to the upside just based upon an oversold condition on the 1-hour and the 2-hour. And if you look at the 4-hour, it's even more evident. The 4-hour to me really defines a lot here. The 4-hour is telling you we're in a bottoming process. Listen, this is not a good time to short. You can make money shorting here, but honestly, what could you make? What, $30 to lose 200? That's not the way we operate at Theo. We don't think like, hey, I could make $1 to lose 9. That's how you get into trouble in this business, where you let risk out the window and all you do is like chase performance and chase the chart. That doesn't cut it. You have to manage your risk around here. So if you're out here trying to short this, I'm not telling you can't. I'm just telling you like, yeah, well, there's support at 5,000. And if the momentum turns, you could be squeezed 100 points today. Who knows? The Fed could say something. A central bank could say something, and you leave yourself totally exposed here. So I'm not one to step in here and tell you to short. We've got Don back on the line
back,
here, so I'm going to turn back to Kaufman.
Yeah, I am back.
Don, I was just saying, this is a bad time to short into a hole. This is not a good time.
No, absolutely. And especially, considering we could explode back to the upside. So
I'm going to turn it back to you. You can take control of the screen.
Absolutely. You can hop back off. It's okay. Sorry, I caught him off guard. So let's get ready to rumble. All right. Sorry about that. I had an issue. I'm in trouble. With my wife over there. So it's good. It's okay to go. All right. Flip your camera off and you're good. Here, I can exit you. Right? Do I have to exit you? No, he's exiting himself. Awesome. All right. So with that, sorry about that. I was distracted for a moment. Jeff, you have to leave. There we go. There we go. Got him out. Sorry about that. No, I actually this is kind of messed up. I had one of my kids needs medication and it was in my car here. So I had to make sure he got that one. I was sweating a little bit for that one. So they were on their way to school and had to stop over here to grab that. And yeah, I had to actually go find it. All right. Yeah, that's right. I didn't have any gray hair until I had like children. I can pretty much mark the point where the hair started turning gray. And somewhere between I do and a child. All right. So as it is, here we go. That was actually my fault. Everything's my fault. By the way, I'm getting good at saying that. My fault. My fault. It was in my car. It's no, he's absolutely fine. Absolutely fine. But he had testing today, so he can't go to, can't miss school. That would be bad. That would be very, very bad. Anyway, S&Ps at this point are up some 26 handles. As I keep saying this morning, it's going to continue to be relatively sketchy out there, even if the advanced decline line picks up. Now, I know that Corey, where is Corey? Anyway, I know that Corey is probably like, choking over here when I'm talking about like the advanced decline line. The advanced decline line at this point, you have to look at it differently, okay? And that's in respect to the fact that in heavier volatility, correlation matters. The higher that we're correlated actually can increase the chance of market reversals throughout the course of the day. But again, I continually reiterate, although the S&Ps are up some $24, this is not a rally. I want to make that clear. This is not a rally. This is not the droids you're looking for. Not only isn't it a rally, it's like chop at this point. 24 points isn't but like halfway home to the daily expected move. And that is one of the most critical things that if you're going to pick up anything today. Now, am I going to go out and am I going to short this market right here? Even in the financials, and bear with me on this thought. So one of the trades I'm looking for right now, as I said earlier, is I want to short the financials, okay, and look for them to roll back over. But I personally think it's a little bit early in the day to do so. Like if we're gonna persist, if we're gonna have, the rip your face off rally, these financials are gonna come up a little bit more. So I'm gonna be, even at fear of missing it, I'm gonna be a little standoffish. I'm gonna give it a few hours before I actually step in that trade. Okay. Now, there's another aspect that I really want to cover, and that happens to be exclusively about stocks like NVIDIA. Okay. This is going to be a rough one. NVIDIA did not participate in the market sell side activity until Friday. Okay. And if you're looking at the S&Ps and you're like, well, the SPX is actually sold off. The SPX has sold off. And on Friday, had a little bit of a down day, but Friday was brought to you by NVIDIA. Okay. At this point, this is the one you've got to be extremely careful about. And the reason you have to be so careful about it is at any point today, it could actually go back into a fit of rage, because what you're seeing right now, and again, I want to reiterate to people, like, when you think of buying a dip, this is not a dip buy at this point. This is a little bit of short covering. It could catch fire and we could explode to the upside. And I'm not discounting the ability. If you haven't heard anything I've said today, I'm really two-sided today. Like the S&Ps could be up 50 or they could easily be down like 50 today. What I want to caution you with is like NVIDIA. I know it's up $24 right now. I could care less. The options activity in here is limited at best. Okay. It's the call activity. I don't know if this is going to pick up, but that is not going to be enough to sustain this product. Now, there is absolutely no put buying in here today, but that could also change. What we saw last week was traders were actually buying puts. Buying puts forces stocks down because of hedging activity, right? Cannot stress that enough, that it's hedging activity that actually moves these markets. And in NVIDIA, okay, all I can tell you at this point is this is not the kind of order flow that's going to be able to sustain this. Okay, if you don't get traders rushing in right now to start to buy calls, you're going to see some slippage in NVIDIA, which is going to call the entire marketplace into question. Moreover, as I said to you, NVIDIA is expressly the reason that the marketplace, okay, had a rough day on Friday. Okay, take a look though at Meta. This thing is unchanged right now and slipping. It's unchanged and slipping. Okay, and it is unchanged. 0.2% doesn't mean squat. Google has a bid under it, possibly slipping a little bit here. Google, though, has felt zero impact from sell side activity thus far. And the reason I like to go through areas in the marketplace, okay, that are going to be very suspect moving forward. Unequivocally, Google's going to be at the forefront, but Google also has its earnings, okay? Do not think for a second that this thing can't sell off before its earnings, okay? That's sheer lunacy at this point. You have about a $9 expected move. This thing could easily be down that $9 before. Watch Google carefully prior to the earnings. Amazon finally, okay, coughed up its cookies a little bit this past week. So it cracked outside the expected move. Amazon, though, again, well worth watching. Its earnings are not this week. It is the first time it saw sell side activity. Obviously, Apple, to me, Apple's out of the equation right now because Apple has been pummeled. Last but not least, Microsoft. Microsoft, okay, got hit fairly hard last week. Also, okay, contributing to some of the down move of what is the AI trade. Okay, Microsoft today, and definitely called into question, hanging on by a thread, but basically flat. The point that I'm trying to make and the picture that I want you to see is what's holding the Nasdaq up right now? Anybody? What's holding the Nasdaq up right now? Surely isn't Microsoft, definitely not Apple. You got a hint of Amazon, maybe a side order of Google. Meta's about to go negative on the day. You have NVIDIA. And NVIDIA, as I said, and this is why I actually went through this, NVIDIA's order flow, ambiguous at best. Don't tell me for a second that there's a lot of call buying in there. Yeah, there's some more call buying than call selling. There's no question about that. Okay, ambiguous at best inside of NVIDIA. This is one hell of a sketchy little marketplace that you're in because, again, we could catch fire, explode back to the upside. No one seems to want to make that commitment right now. And the most interesting thing is that shorts don't seem to be covering. Now, while I'm saying that, though, volatility has remained lower. Things are kind of mellowing out maybe a little bit. We'll keep an eye on that throughout the course of the day. Like I could sit here for the full hour this morning and just look at volatility and tell you everything that's going to happen in here. Because in the midst of volatility, a marketplace that's volatile, and I'm not ready, people are like, is this market turning bearish? You got to get that crap out of your head. You have got to get the crap out of your head that you've been fed for so many years that it's a bull market, it's a bear market. Really? It's such a bullish market. That looks really freaking bullish. Okay. That looks bullish. This does not look bullish. Okay. NVIDIA, very, very bullish. Tesla getting killed. The point that I'm trying to make is you have a very widely bifurcated marketplace. Okay. And what you have right now is you had a handful of stocks that were very bullish carrying the market. And that handful is finally coughing up their cookies. And again, I'm not going to tell you that this thing is just going to sail off into the sunset to the downside today. Okay. But it does look like we're going to be in a pretty extensive patch of volatility. What that would entail, again, I hate the term, it's a bull market, it's a bear market. Okay. Volatility, just, look, volatility and the bear might go hand in hand. I don't really care what you might think on that particular front. But volatility, okay, it is the beast, and you better get used to it because that's all you can see ahead of you right now. All right, especially with things like, look at the dollar. The dollar's actually cooled off a little bit today, but and strengthening the dollar, that is not good for world economies. It's just not good. I know people were talking about it's one of the largest losses in gold. Okay, it's geopolitical risk. Look, gold might have been an overcooked, turkey at this point. Neither here nor there. Do not look at gold as this is risk abating. Okay, gold could be cooling off a little bit because people might be starting to get hammered in their, in their stock portfolios. You get hammered in your stock portfolio, you start selling gold. So basically, you sell gold to finance, the issues that you're taking on in other portfolios. Look like we're actually going to crack some of the session lows. So hold that thought regarding volatility. All right, let's look to positions for just a moment. Speaking of positions, Meta, okay, it's bleeding out. Let's go look at Meta's order flow. Here we go. There is definitely a little bit of put buying going on. Nothing catastrophically large over there. Okay, but we're starting to see the put volume pick up. It's not extreme though, by any stretch of the imagination. It's not the driver, if you will, behind this this move. Okay, so let's talk about Tesla for a second. For those of you that missed some of the news on Tesla, okay, Tesla's getting pummeled again. Now, look, Tesla is no longer even in the Magnificent Seven. It's not even on the radar screen. I do find it, though, a fascinating trade, given the fact that it's getting pummeled right before its earnings announcement. This could be a very interesting trade for tomorrow, subject to the fact that maybe there could be a little bit of a bounce. We'll see. But I may actually trade it, okay, for a short-term bounce tomorrow. Keep that in mind. By the way, Nasdaq barely holding it together over here. As I said, this is the kind of trading session you're going to deal with. Back over to NVIDIA for a second. The last 3 minutes has not been kind. Okay. In Tesla, okay, the trade for me is going to be tomorrow if we're actually going to look for a bid back under this thing. You know, Tesla's going to have to do something in their earnings call. The reason the stock is down again today, they're in a price war over in China. They cut the price of their Teslas. Their competitor then cut the price of their, vehicle, yada, yada, yada. They're in a pricing war. It's actually interesting to see that, though, because first of all, I appreciate the fact that it's price war to the downside. You do realize that there's still a lot of cars, US cars, that are still like, 10 grand over sticker. A lot of that crap is ending. But this, I think, actually helps to some degree to cool inflation. That is also something that some of the price cuts that have come here in the US has been quite helpful. I was driving around this weekend and I'm realizing, it feels like probably 25% of the cars here in Arizona, specifically here in Scottsdale, which is a nice area, but like 25% of the cars are probably Teslas in here. Okay, not EVs, Teslas. It's it's a giant EV slowdown, except for Tesla. Ooh, we're seeing more and more Cybertrucks on the road too. As I was telling people this the other day, I'm like, I don't care who you are, whether you like Tesla or not, whether you think the Cybertruck looks like a garbage truck. You've never seen more people surround a vehicle in a parking lot than that thing, ever. Okay, we see Bugattis every single day driving around here. $1 million cars. Everybody goes, I've seen that before. But the Cybertruck, people are packed around it. I've seen a couple of them already, and I'm even like, holy crap. Anyway, I'm curious to see what those earnings. Okay, I'm becoming a Tesla fanboy. Don't tell Corey. He'll lose his crap. He is not a fan of Elon Musk. Sell side activity is starting to pick up inside of the NASDAQ. Just people, okay? What do you want to look at? So there's sell side activity. Do the volatility futures agree? Yes. They've actually picked their head up just in the last 4 minutes. The vol futures have picked their head up off the mat. So this is where you got to be careful. It's not over yet, okay? But if this starts to pick up a little bit more, I would actually legit put it at about 17. Those vol futures start to cross 17 again, you're going to have some issues in this marketplace. So we are right on the threshold again of seeing some bigger selling in here. Okay. Cybertrucks by the side of the road. I like it. Eric had a dream last night. I'm sorry, I have to read this. Eric's like, I had a dream last night. NQ down 1,000 handles. Eric, you and I are sharing the same dream, man. I didn't actually have that dream last night. It's happening right now. My dream. It's not that I don't like this thing. I would like to see it fall 1,000 points though. That might hurt some people, but okay, it's just going to be temporary. Just a little, this is the kind of marketplace though, where you keep looking for the door and you're looking for those bounces back up. And some people start to rationalize that ain't coming, hit the sell button. Okay. And that's how you can really get a big down day. Then you're going to get the wicked rip your face off rally. Okay. Believe me, I'm watching this marketplace thinking to myself, I'm like, this thing's going to explode back in a couple of days. It's going to explode back. But that kind of psychology and trying to time bounces, forget it. You're just going to get hammered. You have a much better opportunity is after the bounce comes, sell into it. Okay. This is not going to go away anytime soon. We literally have not had a bounce. There's been no bounce whatsoever. This is not a bounce. Like this is 13 handles and holding on, by a wing and a prayer. You'll know it when it bounces because the Nasdaq will be up, 300-400 points in a day. That would be, within expected moves. Anyway, so a lot of earnings catalysts coming out this week. In terms of positions, I've exited everything. I also exited the Costco position. If you're not out of the Costco position, well, the answer is, well, why not? You should be. I mean, I should say the answer, but the reality is that trade is over and done with. We were able to knock out the Costco trade. It's down again today. At this point, I'm just waiting very patiently for bounces. Okay, again, I'm going to play the game of bounce and fade and bounce and fade. Right now, to me, it's financials that I want a piece of. And I'm dead serious. I look at JP Morgan. I have a very strict rule 5 days after earnings. So 1, 2, 3, 4, 5. Today would actually be reasonable and feasible to trade JP Morgan. If I thought this thing was going to sell off, okay, I would go after it. But I have a problem because when the market bounces, okay, JP Morgan, even though it's up today, JP Morgan is going to bounce even more. JP Morgan also had this pretty tremendous gap for the earnings. Anyway, it's right up against it. This might be a decent place to fade it. Okay, I'm a little suspect about trading some of the equities right now. Right now, to me, I'm a little bit more comfortable going after like XLF. Okay, and that's a pretty good bounce. In fact, if you look at expected moves, last week we ended higher. It's like the only thing that really ended higher last week. I mean, take a look around. The energy sector was towards the lower edge of the expected move. The QQQ got absolutely smoked outside the expected move, right? What else did you have finish higher? I was just going to show you a couple stocks like Costco outside the lower edge of the expected move, bringing up Caterpillar. Caterpillar even hit the lower edge of the expected move. There weren't too many bright areas other than financials. And that's why I actually want to, fade some of the financials out there. So yeah, bear with me on that front. I don't want to tell you that I have the perfect timing in here. Okay. I don't want to tell you I have the perfect timing in here. I do want to tell you though that there's a lot of catalysts to come this week, and we'll see how it plays out. All right, sorry, I'm gonna hold off just about 5 more minutes before I turn it over to Jeff Bierman. By the way, again, don't even discount the ability for us to still rip and rally today. As I keep reiterating, the volatility is not picking up. Okay, you're okay to go here. Okay to go. S&Ps are up 14. In terms of other positions, look, stuff's starting to finally turn our way a little bit. For those of you in the Ultima TheoTRADE portfolio, this is the portfolio margin account. We closed out of a QQQ, again, a QQQ position last week after a roll. We're in good shape in this portfolio again. We definitely took a big drawdown. That drawdown hasn't just been largely mitigated. The drawdown, 2/3 of the drawdown is gone. Indicating we're definitely on the right side of trade. So what I am looking for and what I am presently waiting for in this marketplace, okay, is well, here, simply put, I'm waiting for a more significant volatility break. And I want to actually, this is the last couple of things I'll tell you before I turn it back over to Jeff Bierman. I do apologize for that earlier. Okay, I'm in trouble. I'm not in trouble. Okay, my wife left stuff in my car. It's here. Okay, she couldn't find it in there. The Tesla actually has a lot of different compartments to hide stuff in. Okay, it's all kinds of storage in there. Yeah, again, speaking of Tesla, I think I am going to trade that one tomorrow. All right. I mean, what else could possibly happen to Tesla to the downside? Can't get worse than it already is. Okay, and if it does, I think it's worth skin in the game. In any regard, the last thing I will say to you today, okay, I am being incredibly patient, overly patient in waiting to sell premium. Okay. There's one thing that I'm not really comfortable with in this market. Okay. And that is we're very orderly right now to the downside. I know there's some sell side activity. I recognize in the midst of that sell side activity that the VIX has caught a little bit of a bid. right? So the VIX is up, maybe it's fading a little bit today, yada, yada, yada. I got it, okay? I am looking at things like VVIX, volatility, the volatility index, which again is abating a little bit here. But with all due respect, we just haven't seen, okay, a significant volatility break. And it really occurs to me that this is definitely not, okay, significant volatility. And I suggest to you, be patient, even at the fear. Again, look, you've been through 5 straight months, okay, of a relentless move to the upside. It's not even that fast. This portion was fast. This was just relentless, right? I think you would see a much more substantiated volatility kind of break where the marketplace literally feels like snap within seconds and you see vol start to take off. I mean, again, with all due respect, you haven't even had the VIX hit its stride yet. 20 starts to get interesting. It's not even hitting its stride. We're not, that's if you looked at a distribution curve over the last 20 some odd years, right there in the middle is 20. Okay. In fact, here, it's a better way to do this is just to bring it up. Here's the max chart in the VIX. Forget about all this crap. Let's just, come into here, yada, yada, yada. Okay. You can actually put, if you want, you can even put like moving averages on here. That's fine. It's a monthly. All right. Let's get crazy. But there's a lot of different studies you could apply over here. But for me, I just put the little mouse right there and say like, okay, that's kind of the watermark for where volatility starts to pick up above 20. And we only traded there for a matter of moments. Okay. So at the first sign of volatility, I like to kind of be a little standoffish. And that's exactly what I'm doing right now. Okay. And I'm going to do it until I'm comfortable. Okay. Not you're comfortable. It has to be my comfortability because in the end, I'm the one usually pulling the trigger on these trades. And by the way, if you see stuff that's up 50%, look, this was rolled. So we need it down considerably more. It's still a $116 option. But look, the options now, they're out of the money, which is important. So look, just give it time. The point that I continually want to make here is that this marketplace, okay, is just now starting to emerge into more volatility. We're not home yet. We haven't seen a big break in that volatility, but there's definitely some signs, okay, and occurrences of that going on. You would think that earnings this week would be critical. Not necessarily so. Just use those as catalysts. With that, stay tuned. Again, I am not executing anything first thing this morning. Okay. Unfortunately, I'm here in the first hour. I got to let this play a little bit. Like my account, and I'm bearish right now in the account. I'm down $1,000 today. It's freaking amazing given the fact that the S&Ps are up. Just goes to show you, okay, you think that this is a bullish tape. If I'm down $1,000, this is no bullish tape. Okay, this is completely undecided at this point. So that's why I'm going to let this thing play out. Part of me wants to actually see the bounce. I'm serious about that. I kind of want to see the bounce because I think it's going to be opportunistic. I look at my P&L over here and I think to myself, oh boy, this thing's not going to bounce. Then again, on the other side of it, if we break today and we have that big snap, okay, then it's going to actually be high time to sell some premium. So again, sit back, try at times like this. Don't jump out in traffic. Okay. Sit on your hands, whatever it takes. This is traffic right now. You're right kind of in the middle. We haven't made a move. Remember, expected move today is up $44 or down $44. Okay. And right now we are way inside that trading range. Stay tuned. Jeff Bierman is coming on here momentarily.